Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through market update. Earnings season is pretty much coming to a close here, so I'll review some of that. And Joe's going to go through a sector analysis. So that's what we're doing. Let's get started. Okay. So you can see here kind of market overview wise, Russell's still in one, SPX, kind of the canary here, went into two and pretty much immediately went into six. So, the other ones are still holding where they were last week, but kind of strange, SPX kind of leading the way on that, but we'll take a look into that more detailed. Obviously, the pie, we went from 60, about 3 last week. We crossed over where, the red pie is more than 50%. So we've had that crossover and, it's shown in the market. So,
Hey, Josh.
Yep.
Can I interrupt you for a second? And SPX there saying, there's a 70% chance the next state is naked. Any thoughts on that?
Yeah, obviously not a good sign.
Right.
State 6 doesn't happen a lot. I think there's like, for SPX since 07, there's probably like 6 or 7 of them. So doesn't happen a lot. I don't think it's typically a, bullish, you're not going to typically see like the state 2 bounces and stuff like that in a 6. But they're a little strange, kind of like a 3, but on the downside. But you can see we're getting a lot of state 6s overall here. I mean, 9.6%. And that's a lot. Typically we don't see 6 a lot. So
Right.
this kind of a little strange, occurrence, I would say, to add to, pretty much a strange market overall.
And how about that, as you said, we were in 2 maybe for just 2 days or so. Going from 2 to 6, also very unusual.
Yeah, I would say so. I mean, typically it goes 2, 4, doesn't even go in 6 and then goes to 8. So
Yeah.
Definitely a little bit odd. I think we had like back here we had a 6 for SPX, and then pretty much went right to 8, got a bounce and then turned over. So yeah, it's kind of strange. Overall, there's 7 occurrences total. So average days 2.
Yeah.
So
Okay.
so it's not, it's not a trade signal, kind of a okay, what's going on here signal to me.
All right. Well, thank you.
Okay, let's look at market pulse here. So 1s and 8s. So you can see the 8s are been steadily climbing, and we're getting close to the crossover here. One more down day, I would say we're gonna get to cross. It's almost like momentum. It's gonna cross, but is it going to be a big cross, sustained or not? That's obviously what we got to view. I'll pull up the 6s here. I didn't look at it before, but these things normally don't get, this is kind of high for 6s overall. And if we pull this back, I mean, something funky going on, right? 5. I just haven't seen the 6s ever really get that high. So a little bit strange. I'm not a lot more familiar with the other states because they happen a lot more, but the 6 just doesn't happen that much. So I haven't studied it as much, but I can't say this is a 5. 5% is kind of normal, but getting up this high is definitely a strange occurrence overall. So
Well, it's unlikely that we can get a shook on here, but maybe we'll ask them, see if we can get them on next week.
Yeah. Well, like you said, I mean, it's pretty much like, a 2-day doorway, down to 8 for the most part, 7 out of 10 times, it'll go into 8. So, and it's very short. So,
Yeah.
um,
And then with the Russell in one, it's quite a divergence.
yeah, yeah. Well, I think that one's just holding on that level, everyone knows that level in 1900, just chopping around there right now. So, that chart right there, you can see the stops are below, 1900. So, it's kind of touched below, but, it's showing decent support here on that 19 basically line. But, it's just, we thought it would break within, a few days, but it's just been, drawn out longer, this battle at 1900. So, yesterday we closed at 1900 on the dot, and right now we're at 1901. So, what we talked about last week is just, we expect a break, but it wasn't a couple days, it's drawing out, longer. So still waiting for a break, if any kind of indications there, you just look at the 6, it's like pretty much telling us for the most part, we should be hitting 8 in SPX, probability wise. So, maybe that's one leading down, but, this one's been a little stronger as of, the last week, holding up, like SPX would be down, and Russell's up a little bit. So, yeah, they're still getting support. I mean, it's right on that level. This one's in the middle of the range. So, but kind of strange, to see the 6 thing. So I'll have to go back and, see, I guess if we just pull them all off. Yeah, back here. 09. That's pretty strange. 20. So only a few type of these occurrences. It's back in 16. I mean, that's 6%. So if anything, this is the only real pop
Hey,
above
Josh.
6. Yeah.
Yeah, it's late. What
Yep.
was happening? Does anybody remember in 2016 that, caused such problems? Certainly the great financial crisis, I understand that.
Yeah. Dave may remember. That might have been like the downgrade thing, where they're downgrading
Oh, yeah,
US debt.
financial downgrade?
The
Yeah.
downgrade in what, Josh? The, not the S&P downgrade.
No, US debt.
Yeah, that was 2011, I'm pretty sure.
11?
I thought
Okay.
so.
I'm not
that was,
sure.
yeah, we had pre-election, but yeah, there was something. I don't remember what it was.
Yeah, I don't recall offhand what that one was, but this one, I think this is 19. That's where we're
The Fed raised rates.
yeah.
Roja.
That was early though. That was
Yeah.
5-6 months before that.
Yeah, a little early. But I mean, these aren't huge, meaningful. I mean, this is the only one in July 09 time period, June, July.
Mm-hmm.
So that was after the bottom. Now, let's just look. I know we had a big pullback after the bottom, but yeah, that's kind of it right there. Yeah, that's the bottom March, and then came up, had something. I don't recall offhand what was going on then. May have been, obviously it was something going on there. I'm not a historian, that's why I throw it out there, but I don't know about.
August the 5th, 2011 is when the S&P Standard & Poor's downgraded the U.S. debt.
Okay,
August 5th.
okay. Well, what was this one? Anyone remember? taper tantrum. I mean, there's a few things like,
I think I think you're right there. I think it was the taper tantrum in the time frame that you're talking about. I'll see if I can find it while you're talking.
okay. Okay, yeah, so this is strange. This add to the mystery of this market. So okay, yeah, still kind of flatlining both sides here on the lows. Creeping closer on the 200 days. So yeah, to keep our eyes on that stuff. So let's go to the bullish bearish real quick. Yeah, so like once we start heading down, it's almost like momentum's gonna make us cross. So it's just a matter, we're gonna get like a minor cross, or we're gonna get like a bigger cross. So yeah, that's what we have to look for next. And these typically, this is kind of like a typical short duration one. So this was, maybe a week and a half until we top out. So if we see it longer, then it can get ugly. But if there's like a lot of support going on, especially Russell, then I would say it'd probably end up being a shorter one. But really it's just about the support levels, whether we get continuation or not. And, any kind of news that comes out, obviously. So we did this is strange. I mean, everything about 6 is strange. Like the charts are strange. Moves are tiny. The days are 2. So not, I mean, really, like Joe already pointed out, kind of the main thing is here. Typically, it'll go into state 8 from here. So typically. So we'll pull up the big chart, kind of look at that. So yeah, kind of, there we go, to 42. All right, so just circle back here, 42, yeah, and then 38's our other level here. So we're smack dab in the middle of that. Like I pointed out last week, that 42 was strong resistance, just basically turned around from there. So now we're smack dab in the middle of our range, which is outside of a few breaks. This one was a little more significant, but this false breakout been since middle of May last year. So I think look to see how things go. But I don't see us changing out of this much. For time being, any kind of breakout or breakdown, pretty much comes back in this range. So that's kind of where we're at right now. We find a direction. All right, Russell, like I pulled up on this a little more meaningful chart. So that 1900 obviously is our key level here. Got into the stops, but it's held up. So that's obviously a good sign. So you have a bad sign, with S&P and 6, right? But you have a good sign with this kind of holding this level. So kind of par for the course, conflicting kind of signals overall. So it's really I'd kind of focus on the Russell first in this level 19. Is it acting as support or resistance? I mean, it's such a tight little window here. It's hard to say whether it's support or resistance. So once we get a breakup and then like a retest, that could give you an indication. But we're just like going back and forth over 1900 right now. So typically we're in here 37 days. Not a typical move at all. So we can kind of throw out the typical move. From here, we're going to state 2, period. But Yeah, that's kind of like the key level there. I was saying, like, if we get a good bounce within a few days, then, we've seen that a lot with these stop losses where, it just like takes off, not like meanders. This is meandering. So, we'd like to see, basically like a pop up to that entry level. And then, you can still check through that and then it can keep going. If there's support in the market, but right now it's just kind of like, okay, it hits the stops and just it's meandering like on 1900. So we'll move some time away from 1900 and find out, is it support or resistance right now? But until then, we're just kind of watching. Yeah, go ahead.
Josh, I was just going to say, from a catalyst standpoint, in terms of news coming out, it's not all that much. I mean, we get jobless claims tomorrow, which, that's obviously somewhat important. There are a bunch of numbers tomorrow. You got ISMs on Friday and a PMI final. So you got a fair number of numbers the next couple days. And we're really quiet next week until Wednesday. You get another jobs number with the JOLTS. We do get non-farm payroll a week from Friday, which after the monster number in January, that could be a market mover, but damn, that's a lot of trading days. So, it's just hard to say whether we're going to get, an excuse, coming out of, the numbers that are released over the next week or so.
Yeah, it's a good point. Obviously you got the jobs, but yeah, we are pretty much, at the end of earnings. So, things can get, as they digest all the earnings, things have been known to, drop in that little dwell period. Speaking of which, we got 2 weeks until we roll out the next earnings plan. This comes out, nice and quick. So, 2 weeks from today, we'll roll that out. So, I don't see a ton of data. So, coming out, just, what's the Fed saying really? That'll help drive markets. As far as this chart, we're right on that range, deciding whether it wants to be above or below 1900. So you can see up, down, just like right on it, very tight range on that 19. And, this false breakout back here, is this a false breakout? We're still deciding that, because it's right on 19. So, if this is support, that could be really good overall for the market. But we can't tell based off of this flickering over and above it. So I have to give it a few more days, I guess, figure out which way it's going. Okay.
And one more thing, Josh, if we break, I think if we head south, I think, we're heading down to that other, moving average above 1800. That's where those couple fib numbers come in, somewhere between 1810 and 1825. So, that's a target if we happen to break.
Right. Yeah, this I'm glad you point out that 50-day is kind of acting a little like support here. That's a good sign here. It touched the 200 on SPX. So, like I said, in bullish markets, that 50 is really critical, for uptrends. So, that would be something I watch too. Real close. It's tight on that 1900. So really, it's just kind of watching Russell right now, see which way we're going to break. But S&P is kind of telling us it's going to go in 8, but it'd be very strange. And I think I've seen it before to have Russell in 1 and SPX in 8. That would just be crazy. So, all right.
Sign of the times.
Yeah, sign of the times, definitely. All right. Fed minutes. Fed target. We got 1, 2, 3 weeks to this. So kind of moving a little more towards that, 50 rate hike. So we discussed that a lot last week, but just moved a little. Balance sheet, pretty much nothing. Did want to point out the rates. I mean, look at these rates now. Like you can get 5% on a 1-year treasury bill, almost 5 on the 2. I mean, this inversion is not getting any better. We're almost at 1% inversion on the 2 and the 10. We're at 0.9 basically. So it's actually getting worse from where we saw it a while ago. And you just look at this last year, this time last year, the 1 year 0.848. So now we're at 5%. So pretty crazy. Even these, I mean, if you're holding a 10-year, let's just say you bought a 10-year last year, 1.725, right? Like the value of that, like if you wanted to sell it now, is you're getting murdered because of what the current rates are, 3.9. It's over double. I would have to do calculations on it, but anyone that bought those, you can't sell it. You're stuck with 175, and until rates come back down or you get closer to maturity. But I mean, you're taking huge haircuts if you want to liquidate these, these holdings, huge. So I did want to pull that up. I saw a chart here. This is treasury versus dividend yields. Going back to 2010. So you can see, back here, this is where we had that, where they raised rates in 18, market tanked. I mean, look at the size of the move for this current one, 5%. So pretty crazy, for, I mean, this is a risk-free return pretty much, right? You can get for no risk, you're getting 5%. So I would think a lot of money is flowing out, from, stocks, all different types of, real estate. You have to, the cap rate on real estate is well below this. And you have all the headaches of management. I mean, this is just, I think can be a slow process, where people are just, okay, I'm going to park my money here risk-free for 5% when instead of taking all this risk in other areas. I mean, does anyone have a thought on that? Why people wouldn't do that?
I think that's exactly what's happening.
Yeah.
That's why we went to 6, which is such a weird state.
Yeah.
I think we're going to 8, but the risk-free rate is getting so attractive. I think money's flowing out.
Yeah, I'm not talking like some 25-year-old's retirement fund. I'm talking about like pension funds, like the big whales out there that manage tons of money. Not and even hedge funds, things like that. It just makes sense. You got a lot of money, risk-free 5% sounds pretty good. Especially for pension funds and things like that. They've been yield starved for years and years. So I mean, the only problem I could see with them is they got into a lot of stuff beforehand, and now they're kind of stuck with it. Like I was showing that example of just they got 10-year treasuries last year. Now they're like, what do you can't do anything with that. You're not going to sell that for the haircut. You got to hope it comes back down. Otherwise you're just getting 1.7.
Yeah.
Hey, Josh, when you have time, could you throw this out on the shared drive or something? Could you put this screen out on the shared drive when you have time?
The picture?
Yeah,
Oh, yeah, sure.
thank you.
Ready? Done. All right.
Good man.
Yep. Yeah, if you guys like, I bring these up, usually I have at least one a week. I mean, if there's ones you guys want, from previous, I keep them all here. I'd be more than happy to just throw them out there on the share drive for you. So, okay, that was it. That's the rundown. Any questions, comments overall?
Yeah, Josh, this is Winslow.
Hey, Winslow.
This is for Joe, I guess. Occasionally, I pretend I know the Elliott wave. And so where do you think it is? Are we in, a downtrend? We are wave 2 in the ABC. So where do you think we are? Getting ready to crash or keep pushing up?
No crash, Winslow. And, it is an art form for sure. I've just seen really ABCs, I think, going back a ways, coming out of the October lows. I
Yes.
forget which, basically it's an ABC up, and that's really what we've seen. We get the first rally up in most everything, then we got to pull back into December 22, 28, and then up we went again. So that's why I kind of talked about the retracement levels last week in the 3 indexes. I think we're just in a range, Winslow. Certainly not anticipating any kind of meaningful crash. ABC would suggest that the primary trend is still down. It's your
Right.
5 wave that dictates the primary trend. So, my take is it's still primary trend down, but we're in a trading range.
Yeah, okay. So this could keep going
Yes,
this
Yep.
way. Yeah, okay. All right. Thank you.
you're welcome.
There you go, drew it up.
There you go, Josh.
I'm not an Elliott wave master and by any stretch. So,
It's hard to be a master at Elliott wave because so much is gray.
yeah. All right, good question, Winslow. Who else? Anyone else?
This is Dave. I was gonna ask
Dave.
Joe, so you think we're gonna rebound and pull back to the breakout range that we were just in? Is that what I was hearing you think out loud there, Joe?
I'm not sure if we go down, I think that those fib numbers we talked about last week are going to be and they're kind of no man's land on the charts. But I think it's that in the SPX, it's just over 3,900. It's the number's basically 3,930, which really is no man's land. But I think that would be the first stop if we head south. I think it's 11,500 in the NDX, and I think it's just above 1,800 in the Russell. And on the charts, they're kind of no man's land. Those levels are well off the October lows.
Oh, I would agree with that. And being in no man's land, I agree with that too. But in range bound, I do agree with range bound. I'm not sure that we're going to rebound into a bullish kind of a trend though. Shortly is the only my difference there. The trend line from that we were in until we broke it in January, and they're just taking the highs of these little sub trends. If you just take the highs and draw a trend line there, we're almost approaching back to where those were going. After the last couple of weeks, it almost feels like all the market participants that thought that the Fed was pretty much done in January, or hoping that they were, or by the end of January when we went from 50 to 25 basis point raises. I think it seems to me that the market, it feels to me, this could be why it's just a wrong feeling or whatever, but that the participants in the market were pretty much thought that the Fed was kind of like done having to raise anywhere near aggressively, or done raising rates. We talked and I wasn't there last week on the meeting, so sorry for that. But now in the last week or so, it's like, especially with the hawkish, Fed after the minutes were released, And then it's like, well, I guess maybe the Fed's not done maybe raising rates, so we should retract a little bit. That's kind of what it feels like this last little pullback is like. So it almost feels like it's going to stick somewhere, chop around where we are for another month to see whether the Fed, first of all, we got to figure out what they're going to do in 2 weeks from now, right? Doing the March 5th, I think it's 15th, right? The 15th is when they meet again. You know,
The 22nd.
Yep. Oh, the 22nd? Okay,
Yeah.
thanks. Sorry, I thought it was the mid. You know, if they, I think a 50 basis point raise is gonna like throw a lot of cold water. So, okay. Anyway, I kind of believe in what we just saw as the top is going to be the top of the range, and I don't know whether the bottom is too much lower than where we are, but maybe a little. So maybe in the middle of the range is kind of where I expect we're going to be in the next couple of months. What else is there? Anyway, VIX is at 20. You know, VIX hasn't changed much yet in any kind of direction. It got down to 19 or for maybe a week or so, but now it's back up to 20. Middle of the road, kind of grinding around here. Kind of what I'm.
Yeah, it wouldn't be a shock if we went sideways for a while. You know, Josh and I are going through this agonizingly tedious and slow redesign of the platform. And it was just today, I think, you know, in the pie today that Josh pointed out earlier, I think we've got 26% state one and maybe 26% state eights. You know, one of, you know, is that where we are, Josh? Yeah, 26 and 26. You know, haven't had a chance, but would like to go back and see if, you know, when the extremes are within a fairly consistent level of one another, whether that dictates, you know, the market trading in a range for some period of time.
Yeah, that's an interesting question. Yeah, I agree with you.
Haven't had a chance. You know, we got to get through this behind the scenes work first, which is, you know, I said is agonizingly tedious and slow. But once we get through that, you know, we'll have some fun analyzing things like this.
You know, all those analysis are very interesting, like the one you came up with, Joe, on how many days, you know, it's above 80% green, you know.
Right.
That was very interesting, you know, and led me to not enter some trades because I thought we were oversold, and turned out to be correct, right?
Well, I think those big picture offerings that a Shook's work can produce are oftentimes more meaningful than the states themselves. I mean, we all know that some of the state signals are, you know, sometimes not the best. So, you know, that combination of short-term and bigger picture, I mean, there's a wealth of information in here. It's just a question of having some time to suck more information out. That's where Josh comes into with the back testing.
Yeah, definitely. Well, yeah, I think in general, yeah, we bring this up all the time, but I mean, the Fed is tightening. So, you know, that's kind of, you know, until they start shifting, I mean, that's, you can see what they've done in the past, you know, their damage. So, you know, until they shift, or, you know, that's kind of, you know, what we're looking at. Something to this effect, yeah, my opinion. But, you know, we'll have to watch the inflation numbers and, you know, see how things kind of pan out here.
Hey, Josh,
Yeah,
on the SPX state 6, what is the target one? Can you go back to that?
mhm,
39.34.
yeah,
Because the market today was, you know, it started down and tried to get to where it closed yesterday, and now it's just taking a dive downward. We're at 39.52. It could hit that. It could hit that target one pretty quick.
Yeah. Well, it's usually only a day or two in here. This is
Yeah.
literally, I mean, because, transition, so that's one day. So it's literally today is like the only day on average it'll be in there.
Yeah. Well, the market's looking like it's heading to state 8 from
Yeah.
today's graph anyway.
Yeah. Yeah, but I mean, you can see this Russell's, giving a fight,
Yeah.
but just can't get above that or, too far below. So, yeah, I agree. I mean, yeah, if there's anything, it's this kind of 6 almost, certain, and we're just bouncing on this line. So, if it breaks, it wouldn't surprise me at all. Okay. Yeah, great comments, questions. Anyone else for Joe runs through some sectors? All right, Joe, I'll hand it over. I'll just skip the earnings. Most of them are doing good. Yeah, but the bullish runners have had a little pullback. So it's very, had some issues with that one. It's still up, but not by a lot. But everything else, pretty much doing good. So, and I'll have all those results in a couple weeks anyway. So, all right, you ready, Joe?
I am, Josh. I'll
Okay.
maybe grab the screen.
Mhm.
There we go. Just so I was going to run through, as Josh said, the various sector charts. So, or the ETFs. We have 11 of them. And of the 11, 7 are in bearish states. 3 of those are state 2s.
Are you sharing?
Well, I just have Zoom up. I was gonna, maybe go through a couple things before I get into each chart.
Okay.
Just of the 11 sectors, 7 are bearish, obviously 4 bullish, 1 in state 1, 1 in state 8. 8 of them have met targets. 1's had a stop loss. And when I go through them, just a couple quick takeaways. I think, if I can find okay, here, the industrial. Okay, here's our 1 state 1. Okay, so, you can see how tight that is. I would watch this, as a sign for the markets here. We're still in state 1. Clearly, we're almost double the amount of time. So, maybe this thing's going to roll over to a state 2. But, from a leadership standpoint in the markets, potentially, I'm watching this when I look at the 11 different ETFs. That was one. And more broadly, I meant to mention, remarkably, and we know that the major lows were either the very end of September or October 13th. All of these, ETFs rallied, all of them. And I've really, thought it's going to be a market of stocks more than, groups. Each of them rallied between 18 and 22% from the lows. So that symmetry just kind of blew me away. Basically 18 to 22%. I said the industrials are the only ones still in state 1. The consumer discretionary, I think that's here. Yeah, I found this interesting because it was clearly the last to bottom. It bottomed end of the year. We had all the indexes and most stocks, you had not even close to a retest. You just had a Fibonacci retracement to the September, October lows. Well, XLY didn't bottom till the end of the year. I don't know what that says necessarily about the future. Its rally was actually, from a percentage standpoint, a little stronger, or as strong as any, at 22%. We've had a little bit of a pullback. We're obviously in, state 5 here. From a day standpoint, we've exceeded that. So probably another one I'd look to just for clues of the market. I found it interesting that was the last to bottom. From a timing perspective, I think there was one other that bottomed in November. Yeah, it was the communications ETF. Okay, and again, I don't need to talk about these charts a whole heck of a lot. Have a look, but it bottomed in November, a little later than the rest of the market. We all know that it's been a weak group. You got to retest really in January. So, what they tell us about, where the market may go or leadership going forward, I'm not sure, but they were the things that were different. All the rest basically bottomed, as I said, end of September, early October. I'll go through each of them now. You can just take a look. Maybe different things will jump out to you. Here are the materials. They're holding up superbly. Obviously, we just rolled into a state 2 out of a state 1. One thing I did notice going through, some of the recent signals haven't been great in these XLFs, but let's see. Here are communications that I mentioned. We've got energy, always important to look at. That's one thing. I think we're all seeing it at the pump. Pretty damn surprising. Some of these inflation numbers are still as hot as they are, because the price of gas has fallen like a stone. At least here in Jersey, I'm down below $3 at some gas stations for regular gas. So you've got a couple lows in here that are worth keeping an eye on. But let's see, where's this? Yeah, this one is just kind of in no man's land. Hasn't met any targets. It's only been in a signal for 10 days, but we're getting close to the end of that typically. What's next? We got the financials. Always important, but again, the financials and energy. To me, two of the most important, XLFs are in no man's land in terms of, making targets. So it's held up awful well. Just like, almost the rest of them, it rallied 20% off the lows in October. Industrials, I think that's, they're the industrials that, holding up pretty well also. XLP or the consumer staples. Yeah, consumer staples, we've kind of gone sideways. So, if you got a handful of charts, because we've been going sideways for a better part of a month and change, I think worth keeping an eye on to see if these, late January lows hold here. Obviously, we're in state 4. I think target 1's been met. Yeah, target 1's been met. And from a timing standpoint, we're at the average days, 31 occurrences, a decent number of occurrences for a bit of a obscure state. So I think this is another one to keep an eye on, coupled with that consumer discretionary. Couple more good old real estate. To me, incredibly, real estate, it rallied 20% off the October lows. It just mind-blowing to me. But I think maybe Sudhir, you're talking about just the flow of money, or Dave, that flow of money with the perception that, the Fed wasn't going to be as ardent, maybe as it now turns out they're going to be, and money was just flowing into everything. But even real estate got, a 20% bounce out of the lows. Couple more here. And, utilities, not unexpected. They've had a tough time. about 3 of them have pulled back 10% off their highs. Utility, the next one, healthcare, and then communications have pulled back pretty well. But this obviously is, state aid, not really a surprise given the whole rate environment. Healthcare, maybe, I don't know too much about healthcare, but a little softer than I would have expected, I guess. And then healthcare, I think, the Dow 30, I think the largest weighted stock in the Dow 30 is maybe United Healthcare. So I guess I was a little surprised to see this had pulled back as much as it had. And I guess lastly, back to the consumer discretionary. So anyway, they're kind of the takeaways, a lot of uniformity in the rallies. Again, I think I'd watch a little bit XLY because it bottomed in December. Keep an eye on that 71, 72 range in the consumer staples, XLP, see if that can hold, and then just see if the industrials in state one, can hold up. So that's my synopsis on the ETFs. One other comment that's a little scary, as things maybe look to be rolling over, but when you see headlines that corporate buybacks, are the reason for the market to have a floor, it's kind of scary to me if that's what's going to hold us. So anyway, but I still think, basically like Dave, we're gonna be in a trading range for a while. So any comments or questions? Happy to take them, and if not, well, either way, back to you, Josh.
Just one comment about your industrials, and I think there's a manufacturing number that came out today. I was sort of listening to, while I was doing some other tasks, and I thought I heard that it was a kind of a downbeat manufacturing number that came out today. It was not just insignificant, but not overly significant either, but down for manufacturing. It had been up for the previous, I think, 3 or 4 months. So, hopefully the industrials will hold on, but I think maybe that's why today was a little softer. I think Sadir was mentioning it was kind of in there a little bit.
Yeah, I think you're talking about the ISM manufacturing.
I think that was it. Yeah.
Yeah.
I don't know what the number was now. I just remember it wasn't up like the previous 4 months, and it was down this month a little bit, or some, I don't know how much. I can.
Yeah, Pete, that number was expected to be 48. I think, as you said, it's been hotter recently. Came in a little softer, 47.7, and most of the manufacturing numbers, there were a handful of them today, did come in a little bit softer.
All right. Thanks, Dave. Anyone else got questions before we wrap up? Questions, comments, anything? No? Okay, we'll wrap it up. Thank you all. We'll do it again next week.
Thanks, Josh and Joe.
Thank you.
Hi, everybody.